All right, welcome back, ladies and gentlemen, to another video. It's been a while. I've been gone. Where have I been? I've been out on mission, giving candy to kids. I don't do any cool frontline stuff, but I did miss you guys, and there was a lot that was on my mind, but I'm going to try to just kind of consolidate it. But first, I want to look at the markets a little bit. I'm going to show you guys all of my business. Shout out to a new friend that I made on base, Lieutenant Gozone, if you're watching this. If not, you lied to me. But anyways, we were talking at lunch, and she asked me about the channel. And that's, first of all, first mistake. Don't ask me about money, because I'm about to dominate the conversation and talk about all of my business, which is what I do on the channel. And so glad to have you guys back here for another episode on the channel. And we're going to talk about what a stablecoin is today. But first of all, I wanted to get into a little bit of what the markets are doing. Today, we see that the Dow, it was a little bit green on the day. And sorry, the Dow's a little bit red on the day. That's what I thought. I was like, what is going on with the futures? Looks like the futures are pumping a little bit green here, but we were red on the day. However, if we look at TTCF went absolutely beast mode today. Portfolio's up, little baby portfolio's up 2.7%, but TTCF was the mastermind behind this rise in the portfolio today. It was up 8% at one point on the week. I think it's up. What's up on the month? It's up about 20% or something like that. Yeah, 24% on the month. So that has been a rocket ship. I was able to get some shares down at the $16 range. But yeah, all the other ones, this is my more conservative portfolio. This one's down a little bit because that one kind of more so tracks the Dow. But that is not what we're here to talk about today. We're here to talk about the stable coins. So let's get excited first. Let's talk about the reason to even buy the stable coin. So why I'm buying into the stable coins is because they pay a lot of interest. So got a APY calculator. We're going to put in 8.6 APY, which is what BlockFi is paying. We'll get into that in a second here. So we'll put in the APY as 8.6 here. We're going to go for 1 month on the term. And right now I'm calculating about 2,500 for my emergency fund. I've got about 18 grand in there, but let's go with just 15,000. Actually, I'll go with 18 grand. That's what we got in there. Okay. So we see final balance after a month is 124.18. So basically what that means is if you put into this stable coin, which tracks the US dollar, you'll make $124 a month. So that's pretty exciting to me. I mean, this channel's not super exciting, but I think that that's a pretty cool way to make some money. So right here, we're looking in the BlockFi account, and we see the interest is accruing over here. This is the total interest paid. So I just got this 18 grand in there. I'm trying to stack up some money so that I can buy a house. We see lumber prices going up, home prices going up. But anyways, let's get into this article. So there's a couple different types of stable coins. And basically, I wanted to get into the couple different types. I was trying to credit the person on this article, and I'll link this down in the comments. I'll pin the comment so that you guys can come read this for yourself, because I'm only going to hit on the highlights and what you guys actually need to know to make a decision on whether or not you want to invest in this. So let's go down here. What are stable coins? So basically, stable coins are pegged to something. So there's a bunch of different types of stable coins. So the reason why they use stable coins is basically to minimize volatility if you're investing in the crypto markets. So it's a way to duck in and out of cryptos, and it's also just a quick way to transact. So we see that that has some pretty good use cases as we go down here. So the first one, and this is the one that I'm doing over here, I think it's GUSD that I'm in here over on BlockFi. It's a fiat collateralized stablecoin. So this one's backed up 1-to-1 by the US dollars. One of the downfalls of this, so we see that 1-to-1 ratio with mine is US dollars. One of the downfalls is that you are basically buying into that currency. So if the euro here, the US dollar, or I think that's the British pound, Great British pound, if those currencies actually crash, then your collateralized stablecoin will crash with it. So basically what the stablecoin is, to put it in the simplest terms, is it's a one-for-one swap with the issuer of the stablecoin. So other downfall of a stablecoin is that you are trusting that your stablecoin is being backed up by that dollar that you sent. So that is the downfalls of the stablecoin. So wherever you're sending that, you have to trust in basically the issuer of that stablecoin. And they do have third-party audits, so they make sure that it's actually being backed up by that fiat. So all the risks of fiat currency are in fiat collateralized stablecoins. But recently, I just moved my emergency fund into fiat collateralized stablecoin. So I just think it's a good deal. And I'm at a point right now where I don't really need that big of a cash cushion. So I'm willing to take on a little bit more risk. I've got a lot more assets to sell off if I really had to. So we're going to skip some of this, go down to commodity stabilized, collateralized stablecoins. So basically this is like DGX down here. We've got one that's backed by gold. So let's say it could be like a gram of gold equals one of these stablecoins. So it's essentially 1-for-1 swap for that gold. One of the downfalls of this is that it's actually hard to go get your gold. So you could actually have to go to a vault, or like you could have to, it might take a while for you to actually get the gold delivered. You can get like copper collateralized stable coins. There's a bunch of like real things, commodities, could be wheat, soybeans, things of that nature that you could have backed by a stable coin. So crypto collateralized stable coins is the next one. So basically it's a coin that's backed by $1. One of the things that's interesting about this is that they typically, as far as the value of the crypto priced in dollars or whatever your local currency is, you cannot collateralize a dollar or the coin basically with as much of I'm doing a really bad job describing this. Basically the amount of the crypto that is backing the stable coin, you can't have that amount of the stable coin out in circulation. So to make this more simple, let's just say that you had 1 Bitcoin backing a crypto collateralized stablecoin, and the Bitcoin was worth $40,000, right? You're not going to get a stablecoin that's worth $40,000 because if the crypto goes down in value, then the coin is not worth that amount. So there's definitely some risk going on in there. So for example, this one, they've got $500 is backed by 1,000 US dollars of Ethereum. So if that price starts to move around, the brokerage can essentially call this is not sounding very easy, but anyways. So it's basically like you could get a margin call. So you could get that crypto collateralized stablecoin called. So if the Ethereum starts to go down in value, then the crypto collateralized stablecoin, it's not backed by anything if it goes down in value by enough. If that Ethereum were to go down in value by 50%, that $500 coin wouldn't be backed by the Ethereum anymore. So that is that. That one's not as interesting to me because it's just more complicated. It seems like it's not very stable. I would rather just own the underlying crypto. And the last one is non-collateralized stablecoins. So this one actually has an algorithm that introduces more coins or has coins bought up based on supply and demand, and that's supposed to stabilize the price by basically taking coins in and out of circulation to just regulate the price in that way. So real world applications. Day-to-day currency is one way that people use stablecoins, so brokerages can use it between each other. It's a little bit faster than the regulatory hurdles that you have to clear with actual fiat money and ACH transfers and all that stuff. There's fees. There's, it's hard to like transfer cash, or back in the days when they used to transfer gold, that's a lot harder than just using a stablecoin, something that's just digital that runs on a ledger. Okay, streamlining peer-to-peer payments, kind of same stuff there. It's just good technology, fast and affordable remittances for migrant workers. So this is basically sending money back to family that typically is in like a poorer country. Protection from local currency crashes. So let's say that you were in Zimbabwe or something like that, and when they had the hyperinflation, you ducked into some stable coins that were backed by the US dollar. You wouldn't have lost the value of your savings because you ducked into those US dollar collateralized stable coins. One drawback that they did have on that is that it could have some regulatory risk, because countries that know that their currency is going out of favor, they might try to ban the stable coin. But that generally hasn't stopped people anyways. Typically the price just goes up and people do what they're going to do anyways. It creates a black market. So improved cryptocurrency exchanges. So we kind of already went through that. So I think that is about it. Like I said, I can't really credit the artist or the author for this, but I'm going to have some more videos coming. Hopefully you guys learned something from this. I definitely did. I'm parking all of my money in stable coins, and hopefully you guys liked it. If you did, make sure you give it a thumbs up, and I'll see you guys in the next video.